Our time is ticking down. Maybe we should start some introductions while we get these technical issues sorted. So hello, everyone. My name's Chrissy Hill, and I'm the General Counsel for Parity. And I am very privileged to be on this panel today with Angie and Josh. And I think one of the things that actually drew me to the Polkadot community as a lawyer was knowing that we had such strong advisors and people such as Angie and Josh helping set us on the right road that we now see today in terms of a regulatory strategy in the U.S. And so we thought it would be really interesting and informative for everyone to hear straight from their mouths what they've been working on over the past 3 to 5 years. Because recently we've had Daniel Schoenberger, the CLO of the Web3 Foundation, in front of Congress, testifying about how the Web3 Foundation, as the issuer of the native token DOT, has conducted itself over the past 3 years. And then we're also seeing some of the approaches that Angie and Josh were the architects of being positively reflected back to us in legislation and conversations. And so I think we'll go straight into introducing. Angie, if we start with you, and you can tell us a little bit about how we've gotten to where we are at in the U.S. today.
Sure. So I'm Angie Dalton, as Chrissy said, and I'm not sure if our presentation is going to be showing, so we'll probably just have to go through it. Josh and I speak together a lot. We spend a lot of time together, so I think we'll be able to do it without slides. But I advise the Web3 Foundation and now Parity as well. And Signum Growth Capital is both an investor in all things gaming and entertainment, meets disruptive technologies like Web3 technologies like Polkadot, and also AI and other technologies. But I really came into the Polkadot ecosystem in 2019 in search of a blockchain infrastructure that could serve all people, that could serve mass markets. And so anyway, I will turn it over to Josh for a quick introduction, and then we'll dive in.
Thanks, Angie and Chrissy. Hi, I'm Josh Klayman. I am at the global law firm Linklaters, where I'm U.S. head of fintech and head of blockchain and digital assets, and I'm one of our global tech sector co-heads. As you may know, I'm outside U.S. counsel to Web3 Foundation, and I've been in the digital asset space for about 8 years. Prior to that, for about a decade, I did leverage finance and securities, much more TradFi, I would say. But I have a great love for the space. I'm involved in a lot of other things that I don't need to go into here, I think.
Well, and I think one of the things that's common is that, if you're in this space, especially on the legal and compliance, the regulatory side, like many of the engineers, we're explorers, right? It's a new frontier. It's pioneering. There's not a lot that's necessarily in place. You have to sometimes put together different approaches. You have to choose a road and really be strong in that choice. And that's something that I think it would be great for the two of you to talk about the road that we're on now from a regulatory perspective, and some of the different choices along the way that you were involved in order to, again, get us to where we are today.
Sure. So we titled this the Treacherous Road to Innovation, because it is a road and we're on the road. And we were talking earlier about the fact that it feels like, the Costa Rica roads maybe 25 years ago, full of rocks and potholes. But they will be smooth one day. And, maybe it would be helpful for us to go back to 2019 and maybe just frame kind of the start of this.
Sure, although I wish you guys could see our first visual.
Yeah.
Like, that's something.
Well, it looks like he might be setting it up. Maybe we should just start before we. Do you think it'll work?
Could you
Yeah.
transfer to the USB stick?
Okay.
Well, should I describe it?
Describe it.
Okay. So when you see it come on the screen, if you see it come on the screen,
Transfer to the USB stick.
it will be a self-propelled vehicle with a big red flag in front of it. And you may say, why is that there? And I'd love to say that I thought of this myself, but I didn't. I was sitting next to a friend named Guy Silva a couple of weeks ago, and he brought up this analogy. It's not a perfect analogy, but I think it's helpful in terms of framing kind of where we are, where we're going, and kind of providing a helpful sense that we're going to get there, and we will have a road, and it will work. And the idea that this technology is inevitable. And so for that, if you can imagine in your head a self-propelled vehicle, like a predecessor thing to a car, right, with a red flag in front of it. Why? Why that visual? Well, if you think back to like the 1800s, various jurisdictions around the world enacted laws, I'm paraphrasing here, and using a little bit of liberty about them. So basically, they enacted laws because there were these things that were going to be cars, right? They weren't running on rails. They weren't horses and carriages. They looked so dangerous, right? It was a new technology, and it was so dangerous. It was so dangerous, in fact, that they had to mandate that you would have a certain number of people in the car who could drive the car. So that doesn't really leave you very many seats for yourself. And you had to have someone who was able to provide gas to the car. But perhaps most importantly, and relevant to this visual, you had to have someone who would walk in front or run in front of this vehicle waving a red flag, right? Because, the carriages and horses and all these other people, they needed to know that this very, very, very dangerous, very new technology was coming. And some jurisdictions had things like, and if it's after dark, you have to have a light, a red light, saying that it's coming. And so it all sounds kind of ridiculous when you think of all the power and promise and just how much we rely day to day on things like cars, right? But back then, it was something terrifying to many people and something they didn't understand. And that's actually where we get the term red flags, is from these kinds of laws. And of course, as we all know, eventually we discovered that maybe seatbelts work, and stop signs, and stop lights. And maybe we don't need someone running in front with a flag, and maybe the cars can do so much more than they can if you have to go slow enough to have someone running with a red flag, and if you have to have it filled up with people who can drive the car. So I think that's a good analogy in my mind for digital assets and our community, right? This technology is inevitable. It has so much promise, and yet it's new. And many feel outside of the industry that it's scary. And so right now, as we're going through these sort of struggles, and steps and potential laws and all sorts of, things that we'll go into in this presentation, just remember that at one point, the car was dealing with similar things. And we got there with the car, and we're going to have a road for this technology.
Okay, so we're starting very big picture here, but hang with us. We're going to get to the regulatory part. So we were really blown away by Dr. Wood's presentation yesterday, because we've been thinking about this idea that there are kind of new eyes and a new perspective coming into play, from the regulatory perspective in the U.S. And so when he quoted Marcel Proust. I was a French major in undergrad. I'm a French nerd, and I was blown away. I told somebody earlier he had me at Proust, but I wanted to read a couple of the lines that I think are important because it also applies to U.S. crypto regulation.
And so you might want to advance the slide because it's not showing yet.
Okay. So the specific line was, "The only true voyage of discovery, the only foundation of eternal youth, would be not to visit strange lands, but possess other eyes, to behold the universe through the eyes of another." I won't read the whole quote, but the sentiment actually applies to the regulatory backdrop as well. So just to, for anybody who missed it yesterday, this new perspective, I just wanted to give maybe a little bit of a backdrop as to why this was so interesting, also from a regulatory perspective. Josh and I talked earlier about the fact that this new perspective or new vision articulated yesterday by Dr. Wood was in line with the initial vision that has already been delivered. So the idea that Polkadot is for people who use applications, not a sliver of the population, but for all people. and it is resilient because it meets user expectations. So one of the things that brought me to this space was the idea that I spent many years kind of pouring through social media privacy breaches, and this idea that there's a human conflict of interest between the creators of content and the consumers of content, because with this advertising in the middle, and these breaches of security were really kind of just happening. And so the idea is that Polkadot could deliver those original intentions. And so just, I put a few of the bullets here. We can, it's not for this discussion, but this idea that we really zoom out and think about this idea of, we've been calling them parachains, but are they simply cores in a ubiquitous computer? Now, this general reframing of the same technology is something we're going through right now from a regulatory perspective. So are we in a period of new eyes on U.S. crypto regulation is the question we were asking this morning. So I'm not going to go through all these, obviously, but a lot has happened. This is just year-to-date 2023. So clearly there's a lot of negative sentiment around U.S. crypto regulation. There's this continuous negative drumbeat of enforcements, and it's really been going on for many years. And the one silver lining that we picked up, though, in this series, and actually even today, there was a statement made by one of the largest exchanges in the U.S., an answer that was given that is worth digging into. We didn't even have time to put it onto the slide, but if we take a step back, all of these are bookended for the first time by Congress. So just as a reminder, in terms of the purpose of the regulators like the SEC and the CFTC, their role is to regulate the existing laws and to enforce the existing laws. It is not to create new laws. So this is the first time we have kind of a new player in the room. So I'm going to turn it over to Josh to go through this shift.
Thanks. So yeah, as you can see on this slide, there have been a lot of changes. And as you saw on the last slide, there's been a lot of enforcement actions. I think this is not a surprise to anyone to hear this. But I think kind of the flavor of some of the enforcements, at least from the SEC perspective, appears to have changed. In the previous environment, if we go back to the Dow report in 2017, that was really, that was about a report of investigation, right? It wasn't even a true enforcement. It was trying to say, like, here's how this would have applied to this thing that is no longer, which was the Dow. And then a lot of the enforcement by the SEC, the things that they appeared to focus on were things like frauds, scams, and different ICOs, things like that. More recently, there's been a move to actually having enforcement actions that the SEC alleges relate to market structure and a framework for how the actual pieces and parts in the SEC's view should fit together. Now, of course, it's important to also think not just about the enforcement. They also have some new proposed rules that it appears, in their view, go to expanding their abilities through rulemaking to cover off pieces or parts where they don't feel that they have adequate coverage. Now, it's important also to note that, amid all this enforcement, there's a lot of enforcement fatigue. And I think people have come to realize, generally, that a lot of this, the important questions, are highly likely to be, in my view, decided by a court. Right? So yes, you may have speeches, you may have allegations by the regulators, but ultimately, it's going to come down, in many cases, to a court decision. And just as these enforcement actions are focusing on market structure, certainly some of the messages back, the answers back, relate to large questions like whether the SEC even has jurisdiction over these types of assets. So at the same time as we have all of this, we now have Congress in the US looking at the idea of market structure, and we have the introduction of the discussion draft of the market infrastructure bill.
And Josh, I think it would be interesting if you could maybe draw out a few points, and Angie too, in terms of that draft bill, that draft legislation that may have been influenced by the EU and MiCA, and also which do positively reflect back some of the decisions that we've made along the way. Because I feel like that is an important point for all of us in the room being part of this community to have an understanding about. So you can also understand why we do some of the things that we do from a marketing perspective or just from a regulatory engagement perspective.
Can I take this because I'm going to go to... This is a really important point, Chrissy, because where we go into details here on the House, the draft bill for protocols, which we can cover this, but I think the interesting piece of this is this one of the key tenets in the draft bill. Now, this is it was a draft bill submitted to the House of Representatives by the House Financial Services Committee and Ag Committee. Both authors were Republicans, and so it was a Republican-led draft bill. So. Many are saying, oh, it needs to have, we need to see more support, et cetera. But the bottom line is it's getting, some of the key tenets of this bill are getting some traction. Now, one of the key tenets of the bill is something that Josh and the Web3 Foundation have submitted comments on, which I think is really interesting to see. As you mentioned, Daniel Schoenberger spoke before the House committee meeting on May 10th, and one of the key tenets of this bill is that we have a quick resolution for protocols, this concept of rebuttable presumption. So it took, we spent 3 years and, over 50 meetings with the SEC, and the idea is that we believe that when we went through this process, we have, we went through it in a very straightforward way in terms of going through every piece of the white paper and making sure that everything that was promised in the white paper was delivered in terms of this idea of, transitioning from a security to a non-security or software, and all of the things that go into the decentralization process. But also and we also relied on the investment, the framework for investment contract analysis for digital assets. But at the end of that process, it would have been nice to rely on a law. So this idea is that if we would have submitted that, this bill includes the idea that we would have that a regulator would have 30 days to come back to us, and this was influenced by MiCA and influenced by Josh and the Web3 Foundation in their comments.
So I think one thing I would just mention, just to build on what Angie said, is if you think back to when the blog post was released, many of you may be aware, stating that Dot was not in our view a security, right? I think it's important to think about that transition, right? And the fact that there was no clear point at which it was obvious to everyone that any such transition had taken place. And so that's why it was so important to come forward and make a public statement, right? So that people would have certainty, so that people would have some sort of information, right? And so part of this rebuttable presumption that's up here, is to say, okay, so if you start with the idea, as we understood it from the SEC, that a digital asset was sold pursuant to an investment contract, right? And that at some point it may no longer be a security, according to the framework. This idea of a rebuttable presumption is that, okay, so once you get to this point of, among other things, decentralization, there's been so many questions. People are like, okay, sufficiently decentralized, what does that mean? And of course, we would say, like, for purposes of securities laws, that relates back to the Howey test, right? And whether an investment contract exists, whether there are efforts of an identified set of others that people are relying upon. And so this rebuttable presumption is the idea that you submit something and you say, yes, we are in fact decentralized. And then the onus is on the regulator to come back and say whether they disagree. And that is similar to, I believe, what you were referring to with MiCA. I don't know if you want to talk about that, Chrissy.
And that was something that came out during the panel yesterday about regulation that Daniel led. And actually, the member of parliament who was there was very proud of that perspective shift. So the onus is therefore not on the startup or the tinkerer, as Gav referred to prove that they are in compliance with MiCA. What they do is they write their white paper, they submit it, and then it's up to the regulator to respond to say, actually, we don't think you fulfilled X, Y, and Z, right? That's a very different approach. And that is one of the positive things that we're seeing in the US with this new legislation. And I think one of the frequently asked questions that comes up, at least to me, is, well, why didn't we get a no action letter? And it kind of feels like a no action letter would have been like some golden ticket, provided by the SEC to us, but that's not actually how it works in practice. And so if maybe y'all want to shed a little bit of light on how a no action letter actually comes into being, I think that might be a positive thing for everyone to hear a little bit about.
Yeah, we would rely on our counsel, which is sitting to my right, to write a letter, the no action letter, and that would be after we had gone through the process that we went through. Yeah. So, Josh had never given the opinion that a token was no longer a security, and so we relied on her opinion on that.
Yeah, I think it's important just to remember generally that, yes, counsel would provide a letter to the SEC, and then the SEC basically says, okay, you've provided this letter, and you're saying that this will happen, this will happen, this will happen, this will happen. And based upon your opinion, okay, we will not recommend enforcement. It's important to remember not only that opinion is coming from a counsel, the project or the company's legal counsel, but also that it's not a free pass to do whatever you want going forward, right? You're setting forth some facts, and you have to stick to them. And I think part of an important thing to remember is, as was noted earlier and has been noted in other presentations, this is the idea of tinkering, the idea of having technology be in some sense living and breathing, right? Or a machine that runs itself, but where we're continually iterating and piggybacking upon past progress and trying things out. A no action letter is tied to its specific facts, and it's important to remember, it's not a free pass forevermore.
So should we go to the Polkadot related topics, because This is something that we get asked about all the time by parachain teams, and I think it's important to cover, because a lot of the work that we did, this knowledge should be shared, and we work for you. We would love to be able to take some time to actually explain or clarify, but we thought it would be helpful just to start with a couple of topics, and this is the most important one, I think, because it's been in a lot of this action that we've seen in the press. So staking as a service is an investment contract.
In the SEC's view.
In the SEC's view, the SEC has alleged that staking as a service can create an investment contract if it meets the Howey test. So there are questions to ask around this, and a couple of these questions are, is there management skill involved in delivering those yields? And we've seen that there have been in some of these products, management skill. Is there a pooling of customer assets? Are there disclosures around that and communications around that? And so the SEC's view has been that staking is generally viewed as a security if it is presented in a way that the average person would believe that it's similar to a yield product or a financial services product. And so many have asked about DOT, because we obviously have staking as a part of the protocol. And the way that we've always approached this, and the way that the Web3 Foundation approaches communications around the issuance, is that this isn't an investment contract. This is providing a function of securing the network. And it allows you to collect DOT for the help that you provide in securing the network. So it's a very different, again, it's a different lens, different perspective, but it's the same thing. Josh?
Yeah, and I should add this disclaimer, just generally. Nothing that we say is investment advice, legal advice, tax advice, any other kind of advice, and it's our personal views only.
I depend on Josh to say that for me too.
I think it's important to distinguish, obviously we know there's all different kinds of staking. So when we say staking, there's native staking, right, where you're staking your own digital asset, to help secure a network, and then there is a business providing staking services, and even within those different sort of, quote, categories, there are different looks, different feels, different aspects, different marketing, different language. And it's important to remember that all these sorts of analyses, they're case by case, they're facts and circumstances based. So as Angie's been talking about some of these things to bear in mind, we're trying to make sure that if you are talking about staking, that you not inadvertently be marketing an investment contract.
Right. We have 30 seconds
We have 30
left.
seconds left. Okay, so what we should probably do is distribute some of the, the communications and disclosures pieces, because one thing that Josh and I have always been surprised by within this process is how much can happen with proper communications and disclosures. And so I can leave it at that, but we for another time, and maybe we'll just jump to this, which is this idea that if you are a parachain offering a token, have in the back of your mind that this is about the technology, and it is about the Polkadot network and all of the, the vision that we heard Dr. Wood discuss yesterday with a different perspective, but it's still about the technology.
Yeah, and I think I would just add in the 0 seconds we have remaining that a lot of this, as we noted, is going to be played out in court, right? Or, there may be new laws. What we are expressing and what our experience is based upon is what the SEC has alleged and what the SEC has expressed to us its view has been. So when we make recommendations about how, tech gurus should talk about the tech, not marketing the token, things like this is to try to provide guidance that is consistent with what we believe the SEC's view to be.
And one of the things we want to look to do in the near future is start to share some of the lessons that have been learned over the last 3 years with the Polkadot community in a proper way that's helpful, but also manages liability and respects your own counsel, for instance, and their advice. But there are some very important lessons that have been learned, principles that will resonate, that we will make sure are shared. Angie and Josh, are always available and very accessible for discussion. You can always come talk to me or Daniel, and we're also creating a bit of a Polka legal community where your in-house lawyers, if you have a team, or even the external lawyers that you use, we can, again, share some of those lessons that would be in a different format just for the legal teams. So we want to make sure that where it's possible and in the right way, we are doing all of this to lift up the community and ultimately support the tech.
Yep, and so just one closing note, even though we're minus seconds left now, is earlier we were on the Space Monkeys podcast, and we were brainstorming this idea that one of the things that we all love about the Polkadot ecosystem is we have, a lot of talk right now about artificial intelligence and machine learning, and there's artificial and machine in there. The Polkadot network and ecosystem is CI, in our view, community learning. So we're really, or community intelligence, I should say. And Peter Ruschasch gave me this word in German, which swarm intelligence, it translates to. But it's really exciting to see that this living, breathing kind of ecosystem will evolve and still maintain the original vision and principles that were laid out in the launch of the network.
All right. Thank you, everyone. Thanks.